On Wednesday, the Fed came out and said that they see economic growth growing at a slower rate than expected. Right here in this article right here. The question now comes up is this stagflation. You know, the Fed seeing higher inflation and the economy growing at a slower rate. For the people that's new to the channel, this is old news to the people that's, been in the channel for a while. We talked about stagflation about a year and a half ago and saying that's how the economy's setting up. And on this channel, we try to get the information early. And of course, sometimes I say stuff early and it seems like a little crazy because it's not on the financial news. But I'm in the position that I want people to be prepared to take advantage of every situation that's going on. So in this dynamic here, they're talking about stagflation. Really, they're not mentioning stagflation, but they're saying the undertones of what stagflation is. And if you want to know what stagflation is, and I'm about to read it right off the screen. I'm not going to act like I just can memorize the definition. Stagflation is a combination of high inflation and slow economic growth, often accompanied by high unemployment. We seeing some things, especially in Washington, with laying off employees, bringing up the unemployment rate. We're seeing a lot of things in the private sector also that's rising the employment rate. But we're still seeing prices still, holding firm where they're at, and they're actually moving higher, especially in some regions in the housing market. So that's the prime definition of stagflation. So with that, how do I play this? Maybe we're going into that stagflation territory. The thing is, I always tell people, always study history. History don't repeat, but it rhymes. So what I do is I went back to the last time in America that we had stagflation. And that was, the late 70s, early 80s when we had stagflation. And I just seen how was the people that was trying to move and shake and, get their bearings about them to, take advantage of the situation. What was they doing? And then especially in the housing market, you're seeing people doing creative finance. I was about to say seller finance, but creative finance. But that includes seller finance. That includes assumptions. That includes subject to. It wasn't called subject to back then, but different avenues. They were even using the bartering system back then just to acquire properties and things of that nature. So those are the type of things I'm doing now. Right now I'm in progress of doing a assumption loan. And we talked about it on the, channel in one of the videos. I'm talking to other people about doing assumptions, especially assuming the VA loans, the FHA loans that people have out there, especially getting those VA loans and FHA loans that's out there, sub 5, sub 4%. One I was looking at today in Oklahoma, they got an assumption that's like at 3.157%. So those are the different things that, we're doing to take advantage of the situation, just to put more money in our pocket and not sit here and be a victim of the system and try to take advantage of the system that's provided. But for everybody that want to take advantage, there's a subscribe button right there on one of these sides here. Hit the like button, hit the share button, get in the channel, and then come take advantage with me. See y'all on the other side. Have a good one.